Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Kinahan. He is the Chief Market Strategist over at TD Ameritrade with our monthly review of the Investor Movement Index. Always great to have you back with me.
Happy to be here.
In New York City.
Thanks, Jill.
And let's talk about the 11.5 million retail accounts, and you're picking up on the retail trading trends there. A little bit less risk-averse this time around.
Well, again, it's interesting. 4 months in a row now, we've seen our clients choose to take a little bit less exposure to the market overall. This month's interesting. They are net buyers, a small amount of equity. Net buyers overall. Bought a lot of index-type ETFs, mutual funds, small net buyers of equities, but where they are buying is in the lower beta-type names, not necessarily out taking the stocks that are considered more risky, but buying stocks that tend to move a lot with the S&P 500.
Right, and that's encouraging because they're staying invested.
Absolutely.
And that's really what's key at the end of the day. Let's talk about some of those net buys. Where were you seeing the inflows?
Well, Apple, which, it's interesting because, you and I talk every month about this, and as you know, Apple was a net sell in 2018 for our clients, still the number one held stock, but a net sell overall. It hit a 52-week low in January. Our clients came in to buy it. So I find that interesting. GE, with all that's going on there, it had some problems, but our clients still a believer in that longer-term story. Ford, again, another one that the people know well, our clients know well, net buyers of that stock. So again, you start to see some of these old school, if you will, stocks, lower beta type stocks. So I think it's encouraging, as you said, that our clients are buying some of these individual names, and especially stocks that have gotten beaten up so severely as the whole market did, let's face it, in December. But maybe they feel that the pendulum swung way too far on what's going on.
It's always been interesting to watch TD clients trade Apple because they trade it well in terms of timing it and understanding the cyclicality of it and so forth. What about the net sells? What did you see out there?
Well, Facebook, which is usually a largely held stock, and many people will say, it is a largely held stock, I should say, and many people will say, well, hold on, they missed part of the move. Yeah, but Facebook rallied throughout January. So again, a lot of people hold that, and I think that some of the swirl around it still does make people a little bit nervous. A stock that, as you know, they were buying as it was getting beaten up, and it's Bank of America. As it came back in January, some of our clients let that one go. And then Twitter, which is always an interesting one. It's a tough stock for many people to get their arms around, if you will, and that was a net sell in January also.
Well, let's discuss your 2019 outlook because this feels very different than 17 and 18. It's kind of a stock picker environment right now, or at least sectors.
It is. We're in the middle of what I would say is a surprisingly good earnings season. And I shouldn't say, I don't know if we're necessarily surprised by what the fourth quarter earnings were as much as we're surprised by what the CEOs are laying out going into 2019. Overall, it's been a pretty positive message by most CEOs, and I think that's taken some people by surprise. We still do, let's face it, have the blanket, if you will, of tariffs laying on top of us, and I think that's why you're not really hearing many CEOs talking about CapEx spending.
Right.
It's the one big missing element so far. That makes me a little bit nervous overall, to be honest with you, Jill. But I'm hoping that when the tariff situation is finally settled, we start to see a little bit more of that. We have retailers coming up. I think it's going to be very interesting. Again, as you just said, I don't think there's a bigger stock pickers area than the individual retailers because it's such a difficult space to be in. But when you saw Apple, I think when Caterpillar came out, so many people were nervous about what was going to go on in China. Then you had Apple come out, you had Boeing come out, and people started to feel a lot better about things. Amazon's earnings were actually pretty good, but they are one that talked about CapEx, and it actually cost them some things. Reminded me of Walmart a few years ago when they talked about Flipkart. So again, it's going to be, I think that the signs are very, very positive, but I would be surprised if we didn't continue in this very volatile sort of news of the day about China environment.
Right, well, I would also argue the FOMC, that really, the Powell put, if you will, lended some juice to the market as well. Because the market did not react well when they were taking up interest rates. I think liquidity was that big concern there because it was essentially, being the concerns of sucking it out of the system. So I think with what you were saying with decent earnings and the FOMC being incredibly dovish and transparent with their policy certainly helped as well.
Oh, absolutely it did, Jill. They helped a lot, let's be honest. And, it seemed to push things all the way out till June. So we'll see what happens as we get closer. And then we had the jobs report on Friday, which is one that because it was on the back of the FOMC, I think many of us are looking at saying, very interesting data point. Don't think it's changing anybody's thinking. And it was such a muddled jobs report because of the government shutdown. In some parts of it was included, like the unemployment rate, and other parts it wasn't, like the non-farm payroll. So I think we'll have to see February to kind of bring things together and get a true picture of what's going on.
All right, JJ, as always, thank you for joining me
Great
at
to be
MarketSite.
here. Thank you, Jill.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.